Hello everyone, this is your host Vaibhav. In today's session of Daily Talk, we are going to talk about the quarterly earnings for the Google, which is now the fourth largest company by the market capitalization in the world. Its current market cap stands at around US dollar 2.2 trillion, which is humongous in itself, and it has been growing. Its valuations has grown remarkably in recent quarter, and we will be looking at the reason why it has been rising. It has been in a bullish tendency for a while now, and we are trying to decipher the reasons behind it and how far this rally can go. What are the prospects for the coming weeks, coming months? We will also shed light on that as well. As the company has listed on its homepage, its mission is to organize the world's information and make it universally accessible and useful. And for that, now it is taking the help of AI, which is a revolutionary thing in itself, and that is the driving factor behind this frenzy which we are seeing in the tech sector of late. The valuations of many of these tech giants, which was already sky high, is now rocketing further because the boost of AI is making them much more productive, and the possibilities are immense. The Google is trying to integrate AI into various products it offers to the customers, and it is trying to better organize the information and make it reach to the most number of people possible across the world. Its quarterly earnings for the quarter ended March 31st, 2024 have been remarkable to say the least. Its revenues have risen, its net profit is higher, its operating margin seems to be getting better. So this is like having best of all worlds, and there is positive sentiment in the market which has helped fuel its rally, which we have seen after the release of its earnings. If you see the statement of income, the consolidated statement of income, you can clearly see the remarkable growth in the revenues which have risen in a year of around 15 percentage point. Its revenues have gone from just little below US dollar 70 billion to little above US dollar 80 billion, and that points to the strong growth in the revenue. And at the same time, the cost of revenue have not really risen to that extent. The rise in the total cost and expenses is capped somewhere close to 5 percentage point. So you can see this is a differentiating factor where the Google, the Alphabet, which is the parent of the Google, has been able to squeeze better margins this time around on higher revenues, and as expected, its net income is sharply higher. You can clearly see the difference between 15 billion and 23 billion is of around 50 percentage point. So the revenues have grown 15 percentage point, whereas the net income has grown more than 50 percentage point, and this points to the growth in the company's prospects along with the operational efficiency, and this is like having the best of all worlds, and this is of course going to fuel its valuations northward, and that is already happening. The only thing which we need to talk about at this current juncture is the kind of price levels which we should keep an eye on, and where we can get our next entry for the possible bull run again, and we will try to figure out the optimum entry and exit point so as to ensure that even if our assessment go wrong, even if all the scenarios that scenario, we want to be safe. We don't really want to lose too much money we want to be prudent in our approach so as to ensure that we are not putting too much on the single bait, and for that we will analyze its technical charting as well. As far as the consolidated statement of income is pointing to a better future, to remarkable growth which is possible in coming quarters as well. Now here we have this comprehensive income statement as well, and it is also showing these other items which are added to adjust the net income, and that has revised its last year's quarterly earning higher, whereas its this quarter's earnings is revised slightly lower. Now we see how the cash flows have panned out for the company. From the operations, it generated $23.6 billion. Of that, it spent $5 billion, little over $5 billion on the accrued expenses and other liabilities. This is the single biggest item. And then there are these significant items of other assets and accounts payable, resulting in the cash outflow of more than $3 billion taken together. There is a gain on debt and equity securities, which resulted in this negative cash flow of $1.78 billion. And adjusting for all these items, we get this operating cash inflow of $28.84 billion, which is around 20 percentage point higher in comparison to the same quarter of fiscal year 2023. Of this cash generated, the investment activity took away $8.5 billion. Here, the single biggest item of cash outflow was purchases of the marketable securities. This is like parking your funds. It's not a cash outflow which is going to decrease the cash pile of the company. It's like changing from hard cash to some marketable securities which can also generate positive returns. For the purchase of property and equipment, $12.01 billion was spent, and last time around we saw these liquidation of some marketable securities. So there was this cash inflow. These are matured investments of short-term duration, and this brought in $24.98. That's almost $25 billion. Coming to the financing activity, there is single biggest item of repurchase of stock. That's cash used for the share buyback. This is like paying to the shareholders. This is one form of paying back your shareholders, the investors, and that's like returning cash to these shareholders, and that took away $15.7 billion. There was also repayment of debt amounting to $3.07 billion, and for stock-based award activity, $3 billion was spent. Cumulatively, this financing activity resulted in the cash outflow of $19.7 billion, and that doesn't really leave too much cash available on the table. So there is increase just of 445 million of cash and cash equivalents at the end of the period. The Alphabet's cash and cash equivalents now stands at $24.49 billion, which is not that different from its cash and cash equivalents at the beginning of the period, simply because there was just 445 million worth of addition. Last time around, there was this big increase in the cash pile of more than $4 billion. But this time around, the company has decided to increase the awards to its shareholders, and as a result of that, the spending is on the higher side. For the second quarter, the Alphabet is expecting its revenue to grow, but modestly. Its revenues are not really going to register the kind of growth which we saw in the first quarter, but still the outlook remains possible, and the operational efficiency is going to help it post quite a better result in comparison to the second quarter of fiscal year 2023. So year on year, the comparison is going to be quite positive for any investors looking at it from the medium term to long term perspective. But in sequential terms, the quarter on quarter terms, its revenues and its net profit is not really likely to change much. You have to see where your comparative metric is, and accordingly, you can make the judgment for yourself. Now we start the technical side of the story with the starting of the Google, where each candle period is defined at hourly. We are looking at its short-term charting. In last month, it has gained around 5 percentage point in valuation after its quarterly earnings came in the second half of April. We have seen it hovering close to 170 180 price band. It hasn't really moved much. Its range has been narrow, and its momentum has been slightly bullish as it has been making higher highs and higher lows, but its range is quite stable, and it is not really going anywhere in a wild manner. It is simply consolidating its gains, and if you are someone who like to apply the strategies like scalping, I feel the money could have been made, and money could be made as long as it remains range bound in this price band of 170 to 180. Now, for near term, if we have to look for any trading decision, I feel the price action close to the 170 is going to be crucial as long as it respects its immediate swing low and doesn't really decline much. Over the next few sessions, we will have a clear chance of a possible bull run resuming and pushing its valuation beyond this immediate swing high of 180. Keeping that possibility in mind, all we need to do is keep our stop losses in such a manner that our possible loss, is going to be limited. And if we get it right, if there is a new rally beyond 180, anywhere towards 200, 190, 200, that price range, we should be able to take advantage of that. So for that, and for keeping our losses in check, I would suggest watch out for the price action over next few days, or the next few trading sessions, maybe 2 3 trading sessions. And if you don't really see any negative selling pressure developing on the stock price of the Google, and if it continues to hold immediately above the prior swing high, then you can take chances with the formation remaining of higher highs and higher lows, and expect a rally beyond 180 in coming days. Expanding our time horizon to the medium term, we have changed the candlestick rate to daily from hourly, and on this chart you can see the rally which started around the price level of 130 from the first week of March is still ongoing. In the process, the valuation of the Google have grown remarkably, and it is now looking in a elite league. It is now standing apart from its other peers, and it is going to be one of the winner of this AI race. It is building these AI operated systems which can deliver quick insights which are driven by the artificial intelligence and help you automate various tedious tasks which used to take away a lot of time from the human beings. So in this age of the discovery and application of the artificial intelligence, Google is one player which is going to be a key company, and for that, all the investors are keenly watching its share price moves. There has been enthusiasm surrounding the Google, the Alphabet, and that is going to help it rally or continue to rally higher. And all we need is watch out for its immediate swing high and swing low formation. As of now, it has been continuously making higher highs and higher lows. So for this momentum to last, all we need to look at its immediate swing low. As long as it is holding above that, we can be fairly confident of its bull run continuing to take the alphabet on the higher levels, and the price level around 200 is not really far off. That is pretty much within the reach. The only thing you need to do is keep an eye on this immediate swing low, and as long as price holds above that, it is good for the possibility of a fresh breakout on the higher side. But if there is a deep and decline below 170 over next few sessions, then in that case, watch out for the price towards 150. I think it is going to be important for the investors, for the shareholders to see that the Google's shares don't really decline too much from the current levels over next few weeks, and if it is able to hold above 150 in the medium term, then I think we can indeed adopt a buy and dips approach, and in course of time expect the Google to rally beyond 180 towards 200 or thereabout. From the long term, the momentum is quite favorable for the investment, for the long-term investment purpose. If you had invested in the second half of fiscal year 2023, where it was consolidating for the extended time closer to the price band of 120, 130, that would have yielded you anywhere close to 50 percentage point return in the span of couple of quarters. Right now, it's bit of a challenging call to make because it is at the peak. The momentum is of course bullish, but how long it is going to last, that is a difficult question to answer. In this scenario, I would say that from the long term perspective, of course, the momentum is bullish, but then you also have to watch out for the risk reward ratio. That is not really going to be much favorable at the current juncture. Maybe if we wait it out, maybe we wait for the next correction and consolidation afterwards, and as long as its price action remains bullish, showing higher highs and higher lows formation, we can take our chances and invest from the long term as well. But that is going to take time. We will need to allow the alphabet share price to decline and then consolidate while holding the pattern of rise and higher lows. And then in course of time, we can expect it to rally in the second half of this year. So from long-term perspective, I would advise caution at the current juncture. If your outlook is of short term, or if you are looking for medium-term trades, then I think some chances can be taken, but not so much if your outlook is long-term, where the risk-reward ratio is not that favorable. Now it's time for me to sign off for the day. If you have found the session informative and useful for your trading and investment decision. Do write to me the feedback and I'll be more than happy to take the discussion forward. Do like and subscribe to the channel so as to be able to access the webinars from me as well as other hosts which are regular on this platform. See you next time around. Thank you all for joining in. Goodbye.